Hi, I'm Jerry Becerra with Barbary Insurance, and today we're talking about homeowners insurance. Homeowners insurance is a highly standardized product. It's a package of coverages that includes many things. Obvious thing, coverage A, is coverage for the structure, the building itself. Coverage B is coverage for the appurtenant structures, and an appurtenant structure is something like an outbuilding or a fence or a shed, anything on the property that's not part of the main building. Coverage C is coverage for your personal property. Your personal property is all your general contents, and it's on an unscheduled basis, meaning you don't need to list all that property. It's just covered on a blanket basis, usually for somewhere between 50 and 70% of the building value. Coverage D is coverage for your additional living expenses. If there's damage to the home, you may have to live somewhere else temporarily. That could be a very long time. And so it's covered up to a minimum of 20% of the building value. Some companies will cover up to 12 months without a dollar limit. Coverage E is coverage for your personal liability. That's a very important line of coverage. If somebody trips and falls in your home, you'd be covered. Also, some really odd situations can be covered under that. For instance, if your neighbor sues you for some reason, let's say something's encroaching on his property, the policy is going to defend you. It's going to help you find attorneys to pay for this, and it's going to pay damages. And then coverage F, which is medical payments. Medical payments is what I call a courtesy coverage. It's there so that if something happens on your premises and someone gets hurt, you can offer to pay their medical bill, and that would be picked up by your homeowner's insurance. Hopefully that makes things easier so that people aren't tempted to sue you. Medical coverage or medical payments is usually written with a very small limit, maybe $1,000, sometimes up to $5,000 per person. The minimum form you want on a policy is called an HO3. An HO3 is a special form policy. It covers everything except the exclusions. Major exclusions are earthquake and flood, although they can include other things too. You'll also want to get both replacement cost and extended replacement cost. Replacement cost is new for old. So if something's broken or damaged, you're going to get a brand new item of same like and quality back. Extended replacement cost, though, on the building broadens the coverage so that if that building is completely destroyed and the limit is not high enough, the policy will actually pay above the limit. And since it can be very difficult to estimate the exact cost of rebuilding, it's important to have that endorsement on your policy. You want to make sure you insure to value, so work with your agent to do a good estimate on the cost of rebuilding that home. Finally, let's talk about deductibles. Deductibles, I'm not a big fan of large deductibles. However, it may make sense to consider a higher deductible if the savings on the premium makes up the increased deductible in a 3 to 5 year period. So take a look at what that does over time. That's it for homeowners insurance.